The US government is in a state of chaos, and it's dragging the crypto market down with it. But while Washington creates fear, a landmark shift in regulation is creating a massive opportunity. Welcome to the Generational Wealth community, your pathway from knowledge to legacy. We don't chase hype, we decode the market. Today, we're cutting through the noise. We'll explain the two opposing forces driving the market: macro-level fear and a micro-level catalyst for XRP that could change everything for altcoins. Is the market on the verge of a deeper crash, or is this the perfect storm for a historic rally? Let's decode what's happening. First, let's break down the bad news. The federal government has seen two partial shutdowns this year. The first was a 4-day event from January 31st to February 3rd, which was resolved when the president signed a new funding bill. However, that bill only funded the Department of Homeland Security temporarily, and a failure to reach a new deal led to a second, more limited shutdown that began on February 14th and is still ongoing. The immediate price action is concerning, but the real danger for the market is what analysts call a data vacuum. When the government shuts down, it suspends the release of essential economic reports like inflation data and jobs numbers. Without this data, the Federal Reserve, and by extension the entire market, is flying blind. This uncertainty makes it impossible for traders to predict the Fed's next move on interest rates. And markets punish uncertainty more than they punish bad news. This is why we're seeing investors pull back from riskier assets like crypto, contributing to a market-wide slide where the total crypto capitalization has fallen to around $2.36 trillion. But while Washington, D.C. is creating fear, a revolutionary event has been unfolding for one of the market's oldest altcoins. For the first time, U.S. investors now have access to regulated spot XRP exchange-traded funds. After a long and complex legal battle with the SEC, pivotal court ruling determined that XRP itself is not inherently a security when sold on secondary markets. That decision, which became final in August of 2025, opened the floodgates for ETF applications. Today, multiple spot XRP ETFs are officially trading in the United States, including products from Franklin Templeton, Grayscale, and Bitwise. These funds already hold roughly $1 billion in combined assets under management, giving XRP a level of legitimacy and institutional access it has been fighting for years. The story of how Ripple won that regulatory battle is crucial for understanding where the rest of the altcoin market might be heading. I did a full video on the SEC settlement that explains everything. I'll link it for you down below. It is absolutely essential viewing to understand the opportunity we're seeing today. So now we have two powerful, opposing forces: the macro fear from the shutdown pushing prices down, and the micro catalyst of the XRP ETFs creating massive potential upside. The key to understanding this dynamic is liquidity. The shutdown is creating fear that sucks liquidity out of the market as investors flee to safety. But the new ETFs are designed to pull billions of dollars of new institutional liquidity into XRP. This is creating a potential supply shock. On-chain data shows that the amount of XRP held on exchanges has been falling, recently hitting multi-year lows. This suggests that long-term holders are moving their assets into self-custody and are not planning to sell. So, we have a shrinking available supply on exchanges colliding with a brand new wave of institutional demand from these ETFs. And the big money is already getting comfortable. It's been confirmed that BlackRock, the world's largest asset manager, is integrating with Ripple's ecosystem. Investors in BlackRock's tokenized treasury fund can now use Ripple's stablecoin, RLUSD, as a direct on-chain exit ramp for their shares. This move signals that the deepest pockets in finance are already comfortable with Ripple's infrastructure, which could pave the way for even greater adoption. So what does this all mean for you and the broader altcoin market? In the short term, the most critical variable is how long the current government shutdown lasts. A quick resolution will likely lead to a fast market recovery as delayed economic data gets released and certainty returns. A prolonged shutdown, however, could mean more volatility and downward pressure. But looking beyond the immediate chaos, XRP's journey offers a blueprint for the next phase of altcoin investing. It has effectively become the institutional gateway for regulated altcoin exposure in the US. Here are 3 things you need to be watching. First, the shutdown negotiations. Any news of a deal is a signal that the macro pressure is about to ease. Second, the XRP ETF flows. Watch the assets under management for these funds. Recent data shows that after peaking at $1.6 billion in January, these ETFs saw about $500 million in outflows, but interest appears to be renewing. If these inflows accelerate, it could trigger even more institutional players to jump in. And third, Bitcoin's price action. As the market bellwether, its ability to hold key levels, like its current price of around $66,000, will ultimately determine how much room altcoins have to run. We are at a fascinating crossroads. The market is caught between political dysfunction, causing fear, and regulatory clarity, creating opportunity. The government shutdown is a temporary, though painful, headwind. The approval of spot crypto ETFs, starting with XRP, is a permanent structural shift in how capital can enter this market. This chaos may be creating a generational entry point for investors who understand these two colliding worlds. The fear is real. But for the informed investor, the opportunity could be even bigger. Subscribe for daily recaps, drop a comment on your biggest takeaway, and turn on notifications. Let me know in the comments what you're doing. Are you selling, holding, or seeing this as a buying opportunity? We do a crypto news video every morning and a deep dive every afternoon. Let us know in the comments any subjects you'd like us to cover. Stay safe and stay informed. Quick disclaimer, I'm not a licensed financial advisor. This is for educational purposes only and not financial or investment advice. Crypto is volatile. Never invest more than you can afford to lose. Do your own research.